And JB Hi-Fi posted a record half-year profit today of $88 million with over 8% sales growth. Joining me now is Patrick Elliott, chairman of JB Hi-Fi and partner of private equity firm Next Capital. Well, Patrick Elliott, you're in expansion mode still with your 210 store target, and you're on track for a record year this year. What's allowing you to buck the trend?
Well, I think there's a couple of things working in our favour, Tiki. I think to start with, we have a relatively young store portfolio, so those recently opened stores will continue to grow above market rates. And we have been fortunate that historically we've been active in that consumer electronics technology space, and there has been a lot of new product that has driven sales consistently over a long period of time. So I think the combination of those things will see us continue to grow at least for the next 4 or 5 years.
You've been able to fatten your profit margins. There's some suggestion that could be partly due to squeezing of suppliers. Is this the case? And if so, can you continue to do this?
Well, I think one of the benefits of our business model is that we do have an everyday low pricing policy. We don't feed our sales just on promotions. We are low price every day. And so what that has meant is that we've been able to meet the market on price without having to sacrifice margins. And as we've got larger, our buying power has improved, and we continue to be able to pass those on to customers in the way of lower prices, and again, giving something back to the shareholders by way of increased margin.
So do you think that this pressure you're going to be able to put this pressure on the suppliers and continue it?
Well, I think it's certainly the margins that we're enjoying at the moment. They should be sustainable. I think we offer real benefit to those suppliers in terms of reach to the customer, and the larger we are, the lower the cost of doing business with those suppliers as well. So I think it works for everyone.
Now, your former Stellar chief executive, Richard Utridge, formally departed today. He's staying on as a consultant, but of course less skin in the game. Some analysts describe JB Hi-Fi now as a mature business. You're a private equity man. Is that how you describe it?
Well, I think any time you can grow your bottom line by double-digit rates, you're probably far from mature. So I think certainly we still see ourselves and operate as a growth company. And no, Richard left a year ago in May this year, and Terry Smart, who's come through, has done an excellent job, and I think is absolutely the right man to continue to grow the business.
Let me ask you about your growth strategy and about online, because there was quite a lot of focus by analysts today in the online sector. We're in a time where you've got quite a lot of consumers now shifting their spending in the software area, on CDs, on DVDs, to online. Is that going to impact your growth long term?
Well, I think we keep an active eye on just how that develops, and I think we want to play a part in the whole digital strategy around those software categories. I mean, remember, the internet's been around for a long time. People have been online shopping for over 10 years.
But your own online's only, 1 or 2%?
It's still a small part of our overall business, and we very much focus on the convenience customer who likes the online shopping experience. I think the benefit that we have is that we are a very low-cost business, and with our costs being 13% plus of sales, it's difficult to find too many online businesses that actually operate an online model that's as cheap as our bricks and mortar model. So I think our business is absolutely here to stay, and we'll look to play a bigger role in the whole digital streaming side of business.
You also got the risk that some of these suppliers could actually start cutting you out. I mean, if you've got an Apple TV, you can buy videos and get them through your TV now, and it won't be long, presumably, before Nintendo will go direct and you'll be able to beam games straight into the console. Aren't these going to really start hitting your growth?
Well, we're Apple's largest customer here in Australia. We not only sell hardware, we sell software. We sell Apple iTunes cards, for instance. And I think that will be a means which will still connect with those customers no matter what form of delivery the goods or services may take. And they'll still need the hardware, they'll still need to procure from somewhere, and I think we're the ideal place to do that.
You don't think there's eating away of the software side, which actually defines you a little bit more than, say, a Bing Lee, is actually going to be problematic, that you're going to get to a stage where expanding by store, you're going to actually come to some sort of limit there?
I think there's no question that over time the sale of the physical product will decline, and people have been talking about the end of the CD now for over 10 years, and yet it's still a very big part of our business, a very profitable part of our business. So we'll see those product categories go through their normal life cycle, and there'll be new product categories that will come and replace them. So today we enjoy those categories being a big part of our business, and I think we'll have them for many years to come still.
More generally, this big online campaign being run by Gerry Harvey and Solomon Lew, what do you make of it?
Well, I think there's no question we'd all like to have a level playing field from a tax point of view, but I think at the end of the day, the retailer has to have a competitive offering for its customer. And if we continue to do that, then Australian shoppers will choose to shop from those Australian brands that they've grown up with and they love and they trust.
Has it even